Dear students, today we are going to discuss accounting treatment of issue of shares. As you know, in case of shares payable by installments, the various installments are such as application money, allotment money, call monies, first call, second call, final call, and so on. So these are the installments. So here I'm going to tell you about these accounting treatment of various installments. So whenever the company issue a new bunch of shares, the first entry is, or the first treatment is, the company will be receiving the application money. So whenever the company issues shares, the people will, or the public will start to apply for those shares, and the company will get application money. So in such a case, in order to record those application money, or journal entry is this bank account to share application. Here we are receiving cash, that's why bank account is debited in the form of share application. Then once the shares or the shareholders are applied for those shares, we got the application money. Next we have to accept the application. So on acceptance, we'll transfer this application money to the share capital. So here is the journal entry for that. On acceptance of application, application money is being transferred to the share capital account, share application account to share capital. Then in some cases, company will receive excess application money. Suppose if a company issued 1000 shares, and if the company received applicants of 1500, or company received applications for 1500 shares, the company can issue only or allot only for 1000 shares, but the applications are received 1500, which means 500 rupees, 500 shares additional, or excess shares. We got excess application for 500. In such a case, company will transfer or accept application for this first 1000 shares by transferring this application to the share capital, and this excess 500 will be transferred to the shareholders of those applicants, or those applicants. So in case if it is the case, the company has to return this application amount on these 500 shares. So the journal entry will be share application account to bank. So here the application for this excess 500 shares will be refunded to the share applicants. So it's a rare case. Sometimes company will receive excess application money. In that case, company will return or reject those application, and they will refund this application. In such a case, the journal entry is this share application account to bank. Then the next step is to make allotment due. Make the allotment due. So in order to make the allotment due, the journal entry is share allotment account to share capital. Share allotment account debtor to share capital. The share capital is getting credited because the share capital goes increases as the share allotes. So, and later, whenever the company may due this allotment, the company intimate the applicants that you have to pay the allotment money within this stipulated time, and once the due date is reached, they will be paying this allotment money. At that time, will the company will get the allotment money. So in such a case, the journal entry is on receipt of allotment money, bank account to share allotment account, bank account share allotment account. Then this second installment, which is allotment, also completed, and the third installment is first call. So in order to make the first call due, share first call account to share capital, and on the receipt of this first call, the journal entry will be bank account to share first call. So this is the case of calls, and final call, second call, so on will be like that. Whenever if you want to make due this final call, just share final call account to share capital. On the receipt of final call, bank account to share capital. So here is an example. Mona Earth Limited having authorized share capital of rupees 20 lakh divided into 20,000 shares of rupees 100 each. They decided to issue 10,000 shares from this 20,000. Here the authorized capital is 20 lakh rupees, which means 20,000 shares of 100 each. Out of this 20,000 shares, they are planning to issue 10,000 shares of rupees 100 each, payable as 30 on application, 40 on allotment, 20 on first call, and the balance will be 30 plus 40 70 plus 90, then the balance will be 10 rupees. This 10 rupees is payable on second on final call. So all shares are duly subscribed by the public and the amounts duly received was journal entries in the books of companies. So here you need to analyze the question. Whenever you analyze the question, you can find these the data. Authorized capital is 20,000 shares of rupees 100 each, and issued capital is 10,000 shares at rupees 100 each. 10,000 shares of rupees 100 each. We have to take into consider issued capital. We don't have to do anything with this authorized capital. This is just only for this sake of information. We have to deal with only issued capital, 10,000 shares at rupees 100 each. Then on application 30, on allotment 40, on first call is 20, and on final call is 10. So this is the summary of this question. Whenever you get such a question, you have to take the summary of this of that question, or how much is the issued capital and what are the different installments. So here I have taken this summary. Issued capital 10,000, applicants application 30 rupees, allotment 40 rupees, first call 20 rupees, final call 10 rupees. So here the company first will be receiving the application for this 10,000 shares. That's the first case, receiving application money for the 10,000 shares. So the journal entry will be bank account to share application. Bank account share application. Amount will be 30 into 10,000 rupees, 3 lakh. So the narration is application money received on 10,000 shares at rupees 30 each. The narration is compulsory. You have to make it in brief, and it must be shown under the journal entry. So whenever the application money received, the journal entry is bank account to share application. So once the application money is received, our next case is to transfer this application to the share capital. Of course, the journal entry is here. Share application account attached to share capital. This application money of 3 lakh is being transferred to the share capital account. Transfer share application account attached to share capital account. The transfer of application money to share capital. The next case, we need to make the allotment. We need to make the allotment due. So the generally for making this allotment due is share allotment account to share capital. Share allotment account to share capital. Share capital account is being credited. Allotment money due on 10,000 shares at rupees 40 each. So 4 lakh rupees. Then when the allotment money is made due, next we will get this allotment money from the public or the applicants. So whenever we receive this allotment money, our journal entry will be bank account attached to share allotment account. Bank account attached to share allotment account 4 lakh rupees. Then next, now we completed this allotment also. The next is first call. We need to make the first call due. So the journal entry will be share first call account attached to share capital account. Share first call account attached to share capital. So this is the same as the allotment money. Here was allotment money. Here it is first call. Share first call account attached to share capital account. Rupees 20 on each and every shares. So 10,000 into 20,000, 2 lakh rupees. So now we made the allotment money due. First call due. First call due on 10,000 shares at rupees 20 each. Then what's next? We'll receive this first call money, right? So generally will be bank account attached to share first call. Bank account attached to share first call on receipt of this first call. Bank account attached to first call. So on receipt of first call money, bank account attached to share first call. The next is the final call. We need to make the final call due. How we can make this final call due? What will be the journal entry? Just think about it. This is the whenever we make the allotment due, this was share allotment account to share capital, and we received the allotment money. The next we made the first call due, share first call account to share capital, and we received share first call. Then next we need to make the final call due. Then how we can make this? See, share second and final call account HR to share capital. Share second or final call account HR to share capital 10 into 10,000 is 1 lakh rupees. So share second and final call account to share capital, and on the receipt of this share first and final call, what will be the journal entry? On the receipt of this final call, bank account to share second and final call. So now we have completed this journal entries. So the steps to solve this kind of problem is, first make the summary of the question, how much shares are being issued. Here it is 10,000 shares. Then how much to be paid on application, on allotment, on first call, on final call. The first case will be receiving application, bank account to application. Then once we receive the application money, we'll transfer this application money to the share capital account as share application account to share capital. The next we need to make the allotment due, allotment account to share capital. Then we'll be receiving the allotment money, bank account to allotment money. The next step is to make the first call due, first call account to share capital. On the receipt of first call, bank account to first call. The next final call is to be made due, share final call account to share capital. On the receipt, bank account to share final call. Now we have completed this journal entry. Then here I am giving you a, you can test preparing is ledgers. So share application ledger is here, share allotment ledger is there, everything is here. See the bank account. First they received a bank account, share application money, then allotment money received, first call is received, final call is received. In case of share capital, first we transferred share application, then allotment money due, first call money due, and final call money due. So this is the case. You just try out to making all these ledgers. Then here is one question for you. Just try out this question and pass all these journal entries required for passing this question. You need to identify what are the items in this one. First of all, here is the authorized capital of 5 lakh rupees, which was divided into 50,000 shares of rupees 10 each, and the issued capital is rupees 30. This is for us. Issued capital, if you consider issued capital 30. Out of this 30,000 shares, 3 rupees on application, 2 rupees on allotment, 3 rupees on first call, and balance on final call. So how much will be the balance? 3 plus 2, 5 plus 8. Then balance is 2. So 2 rupees is to be paid on final call. Then pass these journal entries and send your question in our Google Class. Okay.